What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data and kind of another update on just how valid some of these numbers coming from Ortex actually are at the current time. Now, then we're going to get into a little bit of options chain analysis. And then we kind of have to talk about two main important things. The first, are these shorts winning? Are the shorts really right in their fundamental thesis that AMC is a failing company, and that is why it's been going down over the last couple of months? We're going to be talking about this concept in full, exactly what we have to look for going forward in terms of catalysts and just kind of the overall market. And going off of that, with all of the craziness going on with this potential war starting, inflation, rate hikes, the economic growth slowdown, is the market headed for a major correction or even a crash? We're going to look at some of the data in this update as well and kind of give you guys the best tools to prepare yourself going into an event like that. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, we do have that free week going in the Discord right now, the 1348 Discord with me, Review Dork, and TMI, the Masked Investor. All you got to do is sign up with the link down in the description down below. And if you don't want to continue using it after that free week is up, you can just cancel before March 1st. But again, doesn't hurt you to come join and just kind of see what we're working on behind the scenes and really see why all of these people are really successful with this strategy, even with the market freaking out the way that it is. Now, AMC closed the day today, $16.47, down about $1.43 and almost 8%. It's up a little bit in the after hours, but again, over the past week or so, AMC has really held up very, very well with the market kind of freaking out and selling off. But it can only hold up so well. There's only so many buyers that can step in to fight all of these sellers on a day-to-day basis. When the market continues to sell off like this, AMC is eventually going to come down with it. But we're going to take a look at that and that whole concept a little bit later in this video. Now, coming over to the Ortex data, we have that so-called 100% utilization. Remember, in one of this weekend's videos, we went through S3 partners data on the short interest on AMC. They're like another Ortex. They just get their data a little bit differently. They're showing utilization in the 80% range and cost to borrow a little bit lower than what Ortex is showing. But again, if we were actually at 100% utilization for this long, we would have at least seen the average cost to borrow start to step up higher than this 1.47% to about 1.52% range that we've seen almost every single day since the utilization has been around this level. So really the only numbers that I kind of care about are the estimated short interest numbers. What's going on with this? We're still at 20.88% estimated short interest in the comparison between the shares on loan versus the shares estimated to be sold short. Now, I know a lot of people were saying today, well, there's not really a lot of shorting today. Is this retail selling or is this institutional selling? Because they've only really net borrowed 520,000 shares. And the volume today on AMC was 42 million. But when we look at the shares already out on loan, 114 million, versus the amount of shares that Ortex has estimated to be sold short, well, there's about 7 million shares that these institutions can use in order to short the stock on any given day. So that is something that we need to keep in mind as well. Now, moving on to the max Payne data and the options chain analysis for this week, we do have max Payne at 1850. Now, these market makers and institutions, we can see by this chart right here, there's a crazy amount of calls just across the board. So they would rather finish this on the put side and kind of figure out what to do with a lot of these puts that expire in the money and collect all this premium on the calls out here. So they really want this at max Payne 1850 or below going into the end of this week. But again, something that I've said a lot in my videos in the past is, yes, they can manipulate. They can do all of these different tactics to try to push the stock down. But the one thing that these institutions can really never counteract, whether it be the data that we are looking at or the price, is a massive imbalance of supply and demand. That's essentially what the market is always going to come down to at the end of the day. Now, let's get into this concept of, are the shorts winning right now? Now, I've said this a couple of times that in my mind right now, just because the price is going down does not mean the shorts are right. It just means they have more money to push the stock down a little bit, or even a big amount that we've seen in the short term. Now, when we take a look at AMC's earnings preview, so we are going to be receiving AMC's earnings announcement on March 1st after hours at 5 p.m. Eastern time. But we do have this preview right here. One of the most important things that we see here is adjusted earnings before interest, taxes, depreciation, and amortization is to be between $146.8 million and $151.8 million for the 3 months ended December 31st, 2021, compared to a loss of $327 million for the 3 months ended December 31st, 2020. So we are going to be having positive EBITDA. That's a very, very strong thing to see. The thing we have to think about here is a lot of these shorts that initially got into AMC and have been in it for years are shorting the stock based on the fundamentals. Now, the fundamentals are starting to increase. So the price is going down, the fundamentals are getting better. We're seeing a little bit of a lag in my mind. This is kind of how I look at it, between what the market should be reflecting as the price and what the price actually is right now. So it's not necessarily arbitrage, but you're kind of looking at it as, well, we're seeing really good news come out, but it's not yet necessarily yet being reflected into the stock. The other thing is kind of how the market is reacting, which we're going to get into in a little bit. The second thing is this right here, and this kind of also goes to show us the power of 1348 and just kind of looking at technicals. So when we've seen in the past AMC's share price and just based on technicals, well, we saw a 1348 crossover right here, the blue line crossing below the red line, if you guys can see this right back here, and then we fell down below the 200 exponential moving average, and we have not been able to get above that yellow line, the 200 EMA, since November. So since November, when we were trading at, let's see, what was the trading price when we had this cross? It was about $41 a share. So after we had this cross, we crossed down below here. It's kind of been nothing but bearishness on AMC since that technical indicator that said, well, there's probably going to be some bearishness in this stock for the foreseeable future. Once we can cross back above this 200 EMA, well, we'll probably be in a little bit of a better spot. And that's also personally where I am looking at getting into more longer dated call positions. That's just me personally. That's not financial advice to anybody. You kind of got to look at what you are comfortable with in terms of when you want to enter into your options and how those options are going to affect the underlying share price, just in terms of delta hedging. So what we've seen here is kind of a technical onslaught of shorting. Now, once we're able to see, well, maybe the price is going to come back up a little bit, we see that cross of the 200 EMA and we start to trend back up, well, those technical shorts most likely don't need to be in the stock anymore. They've already basically made all of their money that they really needed to on this sell-off. And then, since they are technical traders, if the technicals switch to the bullish side, well, we could see the stock price go back to the upside again. But when we think about this as a whole, you're seeing the S&P 500, the SPY, in a very, very, very volatile time. We have seen a pretty significant sell-off from the all-time high at about 480 over here. And we've just been on pretty much a major downtrend since then, with a little bit of a kind of a relief rally back in the end of January. So we're kind of seeing the market drag everything down. Now, I know a lot of people like to say that, oh, AMC, negative beta, it's not going to move with the market. Well, it does move with the market. The whole market operates on algorithms. Some people were asking me today in the live stream, what was the bad news on AMC specifically that was causing it to fall so much? There was nothing. There was all sorts of good news coming out about the stock just over the last couple of weeks. But the market is selling off. And the algos and the big money that is moving things around in the market are going to move most things down. And that's honestly, it's probably not the way the market should be at all. But it is something that we have to deal with. And it is a reality of this market. Now, are we headed towards a major market correction or crash? Well, let's take a look here. Now, JP Morgan over here, this came out yesterday. They now expect the Federal Reserve to hike interest rates for 9 straight meetings, posing a major risk to markets. What rate hikes essentially do is it increases the discount rates in the discounted cash flow models that these institutions use in order to kind of discount the cash flows in the future that they project for a company back to a present value. When the discount rate increases, the present value decreases. So if you are a company with lower cash flow in the present and lower projected cash flows, if you see interest rates really start to go up, you're most likely going to sell off. That's why growth stocks really get hurt in these types of environments. And that's why you hear all of these media outlets starting to talk about that shift, that rotation into value stocks. Now, what is the likelihood of it hiking interest rates for 9 straight meetings? I would say it's pretty low. The Fed is really going to need to be very, very careful with what they do with these interest rate hikes. We kind of saw the Fed go willy-nilly with these, one, the emergency rate cuts back in 2020, and two, the amount of money that they printed into the system. If they have that same mindset of kind of tightening, we're going to see a very, very significant correction if JP Morgan is right. But you have to think about, well, bank margins are going to be able to increase when rate hikes go up, and banks actually do benefit in environments when interest rates are a little bit higher. So JP Morgan in this situation is pretty biased to saying, well, we do want rates to go up more. And since JP Morgan, one of the largest investment banks, may have a little bit of sway in potentially what the Fed is going to do, if they kind of can create that self-fulfilling prophecy and put this idea in people's heads, they might be able to suggest to the Fed that the market and the economy needs higher interest rates. So we also have this individual over here from Morgan Stanley. He is one of the biggest bears on Wall Street. So when we take a look at this right here, putting it all together, Wilson, the analyst from Morgan Stanley, says that the current situation looks similar to 2018, with the most apparent similarity, as we have discussed on numerous occasions, being that we have an overly hawkish Fed, meaning that they are more geared towards tightening some of their policy, raising interest rates, tapering their asset purchases, and shrinking their balance sheet. So at a time when growth is slowing, back in September 2018, the market viewed Powell's autopilot comments on rate hikes and view that policy remained far from neutral as tone deaf, particularly as credit markets were getting roiled in December. So what they're essentially saying here is that they're thinking that the odds could be similar to December of 2018 when stocks had a 20% decrease. Now, we've already seen a pretty significant decrease in a lot of stocks. So how much further do we have to go? Now, when I'm looking at the SPY over here, it looks like if we take a look at this on, let's say, a daily time frame, we could end up falling to some of these levels over here, 420, 415, if we really start to get to the downward direction. But again, when you think about all of the money sitting on the sidelines right now in money market accounts or even in cash in brokerage accounts, there's going to be a lot of people willing to buy this dip because a lot of people are going to have that same mindset that a lot of people were seeing back in essentially March of 2020 when a lot of people saw the dip, they bought the dip, and then stocks went absolutely nuclear. Are we in a different environment now? Absolutely. But when you think about the market as a whole, the Fed is going to most likely raise interest rates at the March Fed meeting. Now, when that happens, we're going to see a reaction out of the market. What is it going to be? Who knows? We don't know how big the rate hike is going to be. It's probably going to be 25 basis points, so 0.25%, or 0.5%, 50 basis points. If it's a 50 basis point hike, the markets might sell off a little bit more. But I think the Fed's going to be a little bit more cautious in what they're doing here. They need to kind of see how the market and the economy reacts to higher interest rates. And again, we do have to watch out about what is going on with this new war kind of coming in with Russia and Ukraine. But again, if we start to see those situations kind of settle down, the market's probably going to trend back to the upside. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.